Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra. Hi, Sonal. Let's get our viewers up to date on the top headlines at 1:30 p.m. The Nifty holds above 18,100 level even as the key indices come off the session highs. The Nifty Bank underperforms, mid-caps in line.
Castrol India slips after margin takes a beating in the second quarter. Muted top-line growth as well. Higher crude prices and forex impact weigh. The management tells CNBC TV 18 that the company has been able to recover most of the cost increases so far and is looking at a margin between 23 to 25%.
Nykaa delivers a decent second quarter. Revenues up 7% sequentially. Is a seasonally weak quarter. The stock perks up.
Auto companies report mixed bag. Bajaj Auto continues to report weakness in exports, while tractor maker Escorts reports strong growth both year-on-year and on a month-on-month basis, while Eicher Motors reports strong double-digit growth in domestic CV sales. Tata Motors sees a dip in CV sales this time around to the tune of 2% on a YOY basis.
Motherson Sumi wiring slumps nearly 6%, posted second quarter numbers. Margins contract 290 basis points year-on-year. The management tells CNBC TV 18 the higher costs will get normalized in the coming quarters. Expect revenue growth to sustain at 30%.
All right, those are the top headlines that we are tracking on Midcap Radar. The auto sales, they keep coming in for Tata Motors slightly lower than what Nomura was estimating. But Nifty as well has come off from the highs of the day, still maintaining above that 18,100 mark. But it is down 70 points from the day's high, courtesy Nifty Bank, which is the one which is putting some pressure. But in the last couple of minutes, we're seeing some buying from the lows. So right now, Nifty is up around 100 odd points. That again is led by the recovery that we are seeing in Bank Nifty. Just from the broader market, I wanted to point out one stock, Reema, that is BASF. There is no monetary impact, so to say, on the back of this news, but it is a big overhang that goes away from BASF because Karnataka High Court has ruled in favor of the company with respect to a 764 crore rupees tax notice. The company, they were very confident that they will be able to win this case, but it remained an overhang because it is a big amount for the company. But now it has gone away, and that's the reason why stock has recovered sharply from the lows, and it is up 3% as we speak.
Okay, that's the latest coming through on BASF. Let's also get Ashish Kyal in, Wave Strategy Advisors, for a technical check on the market. Ashish, it's gotten a bit choppy. First, we had that big fall 30 minutes ago. Now a recovery back to levels above 18,100. What have you made of the day's action so far and the trades that you would recommend?
Hi, afternoon to you and all the viewers. See, if you look at Nifty over past 11 days, it has managed to protect its prior day's low. Not closed below it for 11 days. Only once it happened, that was an outside candle, which does not change the trend. Now, looking at that, this market right now is buy on dips. It is little lower, but that is for sure. So use dips to buy this market. On the upside, we can expect it to go probably towards the level of 18,250. And on the downside, one can maintain a stop loss below that psychological 18,000 level, which is around 17,990. So in case 17,990 breaks, then we can start seeing some kind of a profit booking. But as long as that is intact, I think buy on dips should be the tone for this market right now. And having said that, large cap has been leading the index on the upside. We can clearly see that the first stock pick is going to be Grasim. We can see a good breakout happening in today's session. There has been a 20 days average is providing us a good support. The volumes are picking up, and there is a good pattern target on the upside around 1880 levels. So one can create long positions in Grasim with 1880 as the target, and the stop loss can be maintained at 1690. The next stock on the buy side is going to be HDFC Limited. We can clearly see a very strong breakout happening in this stock. It formed a rounding bottom kind of a pattern, and it's giving a strong breakout now. Any dips, use that as an opportunity to enter into HDFC Limited, maintaining a stop loss of 2420 for the target of 2690.
Okay, all right, Ashish, thanks a lot for joining us and taking us through your technical check on the markets and your picks as well. That's the technical update on the markets. Let's do one thing. Let's talk about all the mid caps that are moving around in trade. We have Vivek with us, as always, to take us through the movers. Hey, Vivek.
Hi, so today, if you're actually looking at the mid caps, slightly muted, especially the small cap as well. However, specific stocks that we are looking at, continue to surge on good volumes as well in some of the names that we are looking at. Max Ventures, remember, some news flow coming in here. On the back of that, stock post, at the upper end, almost 10% higher. Select jute companies, Gloucester and even other companies, yesterday saw a strong move. Gloucester continues to see, follow-up move today and very strong volume. So that's one particular sector that's seeing quite a bit of action. Pokerna, again, this particular stock, after quite a bit, is moving up today on very high volumes. Specific chemical stocks that we are highlighting today, Aarti Surfactants, Valiant Organics, as well as Paradeep Phosphates, all three of these stocks today are moving up and they continue the up move that we are seeing as far as this particular, continuing the up move from the month of October. Now moving on, some of the recent IPOs especially that saw quite a bit of a sell-off, especially names like Delhivery as well as eMudhra. Delhivery saw significant sell-off as far as the weak Q2 operational update came in, but it's seen quite a bit of a bounce back today. eMudhra too, that saw quite a bit of selling pressure after listing. Today is moving up on good volumes. On the other hand, some of the stocks that we're tracking that are on the losing side, CMS for Infosystems today moving down on strong volumes. LT Foods, while the numbers weren't a significant miss, however, markets were keenly anticipating details of the fundraising that the company at this point of time has delayed. So, we'll continue to watch updates on that particular front. Traction Technology as well as Precol today, too, moving down on good volumes.
Thank you very much for that. Another big mover today is Dhanuka Agritech. Came out with their Q2 numbers. Margins have contracted by 100 basis points, but there is a buyback support. The company has approved a buyback of, they will be buying back 10 lakh shares at a price of 850 rupees per share. So that explains the perk up that we've seen in the stock price. The buyback announcement has gotten the street a bit excited on Dhanuka Agritech. Get into a break. Up next, Rajinder Kumar Bhandari, the Joint Managing Director of Satya Industries, joins us next.
Welcome back. You're still tuned into Midcap Radar. Well, Sun Pharma numbers at the bottom of your screen. The stock has spiked up. We have revenues coming in higher than the estimates. At 10,900 crores, of course, was the revenue expectation. And this time around, the company has gone ahead and reported revenues of 10,952 crore rupees. That is actually largely in line with what the street was working with. We also have the profit number, which has come in at 2,260 crore rupees, and that is where we are seeing a 300 crore rupee beat. The stock actually spiking to the day's high. We also have the EBITDA number, and the margins also looking better than what the street was working with. But we do have 27
margins versus expectation of, I think, of 25.5%. Okay. So a beat on margins.
Okay, so we do have Ekta with us. Ekta, looks like a good set.
Well, yes, definitely. Like you said, the revenue is in line with estimates. We were anticipating a 13% growth. They've come in with a 14% growth. And it's the EBITDA which is really outperformed in terms of expectations. So the EBITDA is up around 12.5%. Remember that last quarter as well, it was a positive showing in terms of the margins. And that's what seems to have continued. So the margins have come in at around 27%. The street was anticipating around 25% in terms of margins. So it's definitely the operating performance which is really surprised in terms of the upside, and that has trickled down to the profit as well, because the street was anticipating maybe a marginal decline in the profitability this quarter, but despite a high base, they have managed to report good profitability of around 2,260 odd crores. What the street likes further about Sun Pharma is that these numbers have come despite a weak performance from Taro this quarter, where the Taro numbers came in a couple of days ago, and remember that it was a complete disappointment with adjusted margins at 0% and a reported net loss as well. And, that was expected to be one of the key factors which would probably pull the profitability as well as the operating performance down. But that hasn't come through, and hence that is a big, big positive for Sun Pharma. Just want to point out that we will be waiting for a breakup in terms of the US business as well as the specialty sales. Remember, the specialty sales last quarter were very strong, $191 million. It comprises of a whole host of products such as Sikoa, which is an eye drop, as well as Illumia, which is basically used for psoriasis. So all of those drugs, even Winlevi, which is an acne drug and is expected to, pick up pace as compared to Absorica, which they used to have and started seeing generic competition. So there is a whole host of drugs in their specialty portfolio, which is adding a lot of momentum to their sales across markets. So despite the fact that Taro came in with a weak set of numbers, the street is happy with that kind of operating performance, which is really led by a strong growth from the specialty sales. So it's a thumbs up for Sun Pharma. As you can see, it's been one of the more resilient pharmaceutical stocks, and today it's being rewarded for its numbers.
And I remember, Ekta, when the Taro numbers came out, you had said that when Sun Pharma reports numbers, it could actually report a miss on margins because of the
Simply because of that.
The Taro weighing down on their performance.
Absolutely, because Taro in the previous quarter came in with single-digit margins. They came in at around 8 to 9%. So this quarter, the street was anticipating an improvement in margins. But when it came in with a disappointment where the adjusted margins were 0% and the reported loss was, there was an operating loss this quarter on Taro. So the street was extremely skeptical that maybe that would weigh on Sun Pharma. But that was a one-day reaction. The street started anticipating good numbers from Sun Pharma simply because of the operating performance led by their specialty sales, and that's what you can see play out, and that's the reason why you're seeing the resilience come in for Sun Pharma, the kind of valuation premium that you see for Sun Pharma as compared to the others because of the specialty business.
Okay, all right. Ekta, thank you so much for making sense of the numbers. Clearly, the street is liking what Sun Pharma has reported. Of course, as Ekta said, we are waiting for the breakup and she'll be back with more analysis on that one. But for now, the stock is doing really well, a beat on all parameters, revenues largely in line with what the street was working with. With that, let's do one thing. We will switch from the large cap name to the mid cap name now. As promised, we will focus on Satya Industries. The company is a manufacturer of wood and agro-based paper and is also engaged in power generation. It is in focus after a second quarter number, which has been healthy, even as it saw a sharp rise in raw material costs. Both revenue and profit after tax, in fact, grew over two-folds during the quarter. Rajinder Kumar Bhandari, who is the joint managing director of the company, is joining us now. Mr. Bhandari, good afternoon. Thanks a lot for joining us.
Good afternoon. Yeah.
Strong set of numbers this time around. I was looking at your margin guidance as well. You have guided for 100 basis points increase in EBITDA margins in FY23. Your FY22 margin stood at 20.3%. So that would mean 21.3% in FY23. But it is still lower than FY20 margins of 23.1%. What has led to the sharp fall, and when will you get back to that 23% mark?
Because we went into expansion last year and our production increased by almost 57% over the last year, but pulping capacity in-house is yet to increase to the higher level. So we have been using waste paper pulp to some extent and imported hardwood, softwood pulp. That led to slightly lower EBITDA margin. But overall, if we look at the numbers, total income went all-time high to 464 crore, which was more than 140% plus over the last year, same quarter. And profit PAT went up to 51 crore, which was 150% on the higher side. And similarly, EBITDA went up to 93 crore, again 150% higher over the last year. So numbers otherwise were very encouraging, but these will sequentially keep on improving as we keep on consolidating our expansion output and we increase our in-house pulping capacity. Yeah.
Okay. So what is the expectation on volumes going ahead? In Q2, I think your volumes were about 52,000, metric tons. How much can that number increase to in Q3 and Q4?
Yeah, in Q2, we increased by almost 57%, as I told earlier. So last year we did 1,41,000 ton, and this year we should be making almost 2,10,000 ton paper. So additional 70,000 ton will be coming from the expanded capacity, which next year we intend to increase to total figure from 2,10,000 ton to 2,40,000 ton. Yeah.
So FY23 volumes at 2.1 lakh tons, FY24 will be at 2.5 lakh tons.
Yeah, 2.4 to 2.5 lakh ton. Yeah.
Okay. So you're talking about additional volumes coming in as well. So this is at what capacity utilization? Because capacities will come in right now. And at peak capacity levels, what will the revenue contribution from this new capacity be?
Yeah, our capacity at the moment installed is 2,05,000 ton. So we'll be already doing almost 105% capacity utilization this year. And next year, it should be anywhere around 125 to 130% capacity utilization. And this year, top line should be in the range of 1,800 crore plus. And next year, if the present level of prices sustain, it should cross 2,000 crore. Yeah.
Okay, and from the newer capacity in that 1,800 crore rupees, how much will come from the new capacity?
Total will be 1 lakh ton next year, and this year it will be 70 to 80,000 ton.
Okay. What percentage of your revenues, sir, come in from the education sector, and what's driving increased exports from the education sector?
Yeah, education overall, what we are supplying to the government sector, textbook boards, it is almost 40% of our total revenue, and 60% is coming from the open market. And that percentage, 40%, we intend to maintain even on the increased production level. Yeah.
Okay, so you also wrote in your presentation that 40% comes in at a higher margin. What is the margin difference between the two segments? How much higher is the government tender?
Depending time to time, it is 5 to 10% on the higher side.
Okay, so
because we have to account for any increase in cost in the future also. So sometime you gain on this account, and like in COVID period, we had the orders in hand and we were doing excellent while other industry was struggling to survive. Yeah.
So, Mr. Bhandari, just a confirmation that 5 to 10% higher in the government sector. Is it the pricing or the margins are higher by that much?
Yeah, prices are almost same, but since the grammage is on the higher side, so we make higher production, we can use more filler. The cost of production is on the lesser side, so margins are higher, yes.
What percentage of your revenues are exports on the whole?
It is almost 10%.
Is there scope to expand it, increase this number?
Yeah, depending upon the company policies, if we get good margins in exports, only then we do major. Otherwise, we intend to remain within this level of 10 to 15%.
Okay. All right, Mr. Bhandari, it was a pleasure speaking with you, sir. Thanks a lot for joining us and taking us through the plans of the companies going ahead and the production expansion plans that you have in place as well. Well, that's the word coming in from Satya Industries. The stock is low by 3.5%, but it had rallied in last 1 week, so some profit taking there, but good set of numbers reported by the company this time around. With that, we'll slip into a short break now. We'll put focus on Varun Beverages, which is buzzing in trade on the back of earnings. Stay tuned.
Welcome back. Let's get to our mid-cap spotlight segment. Mangalam is joining in and he's going to be focusing on Varun Beverages. Mangalam?
Good numbers coming in from the Pepsi bottler. 32% growth in the company's revenues year on year, 41% jump in their EBITDA on account of revenue growth, as well as the net profit grew by around 53%. Quarter on quarter, there is a dip, but that's understandable because remember, the previous quarter was the summer quarter. So as a result of which we do see higher sales coming in from there. The good part is that India business had an organic volume growth of 22%. The realizations grew on account of a higher mix of smaller SKUs. And the reason why smaller SKUs did well is because those are the SKUs or stock keeping units which people buy when they are on the go, as against when they are at home, they buy bigger bottles. Strong performance of their energy drink Sting also helped their realizations, and as a result of which margins did extremely well. And the international business also had a 31% volume growth. The company says that in the fourth quarter of this calendar year, they follow the calendar year, it is expected to do better because of the festive season as well. But for me, the biggest positive that the company's done this time around is that they've entered into an agreement with PepsiCo to distribute Lay's Doritos as well as Cheetos in Morocco starting from January. And this is a move away from just beverages and a deeper relationship with PepsiCo. And in India as well, they've started trial production of Kurkure Puffs at their production facility in UP. What this basically does is diversifies their revenue stream, deepens this, the relation that they have with Pepsi, and actually makes all the quarters get equal amount of revenue as against just revenues concentrated in the summer months. So currently 70% of their revenues come in from carbonated soft drinks, 5% from juices and 25% from water. The juices business started just a few years ago. Let's see what the snacks business does for them going forward.
Okay, all I could hear right now is snacks, juices, drinks. So
carbonated drinks, and I think the demand is good, right? Across all segments, you know, as a consumer.
Yes, that's true. Mangalam, thank you so much for that. Whenever you talk about any of your earnings, it's all about products that we all can consume. So that's about the consumption sector. But let's move on and talk about Bharat Electronics that is surging in trade today on the back of some new brokerage calls. Vaishta is here with the details. Vaishta.
Hi Sonal, thanks for that. You're right, actually BEL is surging in trade today, and this is because the Q2 FY23 numbers were out in the past week and the numbers have been more or less in line with the estimates. In fact, the stock has rallied 55% on a year-to-date basis. The management has said that they are confident to meet its 15% revenue growth guidance, and the lower band of the margin guidance has been revised upwards from 21-23% all the way to 22-23%. So some good news. In the long run, also they expect the margins to grow further, and it may come to 24%. The order inflow shall comfortably be beyond 20,000 crores. Also, Bharat Electronics has recently set up a new plant of lithium-ion cell and battery packs in Pune with a small investment of approximately 40-50 crores. Also, the announcement of the fourth positive indigenization list, which includes some 40 items, will provide further revenue growth potential for BEL in future. The company has said that there are no delays in receiving payments from government, which has led to an increased cash balance for the company as on 30th of September 2022. Now, in terms of brokerages, the street is quite confident on the long-term growth story of BEL, given its strong order backlog, the order pipeline, the recent MOU in hydrogen fuel cell. There is a diversification into newer business verticals like hydrogen, fuel cell, EV batteries. There's a greater focus on export markets also. They expect $60 million of exports in this year. There is also a ramping up of non-defense businesses in e-mobility, in railways, in metro, in smart cities. Phillip Capital has a buy rating on the stock with a target price of 122 rupees, while Jefferies has a target price of 130 rupees. Back to you.
Thank you very much for that. Numbers coming in thick and fast. Max Healthcare reports an improvement in operating margins on a year-on-year basis. EBITDA margins coming in at 28% for Max Healthcare. PNB, on the other hand, has reported an improvement in its asset quality. The net NPA for PNB has inched lower, which is a good sign. And the profits and the NII has come in ahead of street expectations. But we're out of time on Midcap Radar, so we're going to hand it over to the next show, Your Stocks, to take the market action forward and answer all your stock-specific queries.